Trade your worst performing strategies. I know that sounds totally counterintuitive, but I'm Dan Murphy. I spent $6.2 million building AI trading tools. The dang computer, it actually programs itself in C code. And I've been doing this 28 years, so you might want to listen up. I know a thing or two about the markets, and I always show proof. The proof is always in the pudding. And so everything is coded into the computer. So I'm going to teach you something that you've never heard of. Okay, so this is something that we invented. I'm pretty sure it's at some hedge funds, but this is one of the most counterintuitive things you'll ever hear. And I'm going to go ahead and use my girlfriend's trading strategy of strategies. And I'm going to show you some examples of what she was doing lately, because her account is right there at new all-time highs, which is holy cow. You know, when you're thinking about what we just went through. And a lot of people got stopped out. A lot of people were forced to liquidate on that Monday because they're very foolish, trading on lots of leverage. And people sniffed that out and then knew to, let's just go ahead and let this thing fall apart. And then they started buying after all the forced liquidation. You don't ever want to be in that situation. So the past few months, her equity has been trading kind of sideways. And yeah, she's pretty new to trading, so she was kind of complaining about it. I'm like, this is great. Sideways in a down market is amazing, babe. Don't worry about it. And then we had that 2-day, Thursday and Friday, and like I said, that Monday, and the markets were just not pricing in all the Trump tariffs exactly the way that he pulled it off. I said, don't worry, let the strategies do their thing, and they sure did. It was a giant rebound, and then some. And you can see that all these strategies over here did very well. So she was holding an Apple strategy, XLK, which is a technology ETF, leveraged NASDAQ 100 fund as well, Train Technologies, which is TT, doing pretty well. And of all things, Visa went up just about the most here. It was kind of a tie with Apple. How did the strategies know to trade these bad boys right here? Well, first, I want to give you some background right here. Is that I was a beta tester 20 years ago for one of the original Turtle Traders. The software back then was called, it was codenamed Lego. And I really learned a lot about multi-strategy trading from, there's a great forum on there. There's a hedge fund guy from Great Britain. And he would just always talk about multi-strategy trading, meaning you trade different instruments. It could be different stocks and ETFs or whatnot, and just make sure they have different rules. And then when you trade them together, it's Wall Street's only free lunch. So it really helps with consistency. If you're struggling with consistency, this is absolutely going to help you out. You trade a bunch of strategies at once. That's great. So your equity goes up smoother. You have more winning months and lower drawdowns. Life is so much better. Less staring at the ceiling at 2 a.m. because you're in a crazy leverage position or you don't know what's going to happen next. Forget that. So I'm going to teach you exactly how to do this, but on a better approach. So we invented a tool called MetaML. And so we'll get back here to my girlfriend's strategy of strategies here. So she is trading 5 strategies at once right here, but she has 29 strategies that she can select from. So there's tons, there's Bitcoin, there's, like I was showing you, Apple and SMCI and eBay and Ferrari and Lilly, Visa and Oracle and Dell and Marvell, just Broadcom, just so many different strategies to choose from. Luckily she knows yours truly, and I could hook her up with all these different strategies. So like I said, there's 29 of them. And what happens is once a month, the machine learning will go ahead and say, okay, I'm picking these 5 strategies. You might be wondering, well, what rule does it follow? What does it know to pick these 5 strategies? It picks the worst strategies, okay? So you better have great strategies to begin with, but your worst performing strategies, if they're good and they're built solidly and they're not overfit to the past, they tend to rebound the most the next month. So just like stocks like to revert around a mean, you know, the people that are drawing head and shoulders patterns is they don't understand how markets work. They work since 1982. They like to be really choppy and they revert around a mean. Well, strategies also do that. And so you can boost your profits and consistency 40 to 50%. So I did a test and it was pretty much across the board was 40 to 50% better returns. Your consistency started going up as well, more winning months, and just all around goodness. So that is really the secret sauce, is to pick your strategies that have the worst percentage gain over, let's say, like the last month or so. I want to keep this simple. There's a little bit more complexity to this. I'm not going to reveal all on this video, but that's really the gist of it. Buy your worst performing strategies and then hold it for a month. And then you just rinse and repeat. So every month you do this. And it's gonna, next month, it's gonna pick 5 other strategies to choose from. And they're gonna be the ones that are performing the worst. And that's what's worked pretty well over the time. So let's go ahead and switch gears here real quick. And I'm gonna end with how the markets are looking right now. In the last video, I'll put a link up here for the smart money indicator. I talked about that, how it was on one of the biggest buy signals in years, and it goes against the dumb money, people that are just terrible traders. You see over here too, you have this huge spike. This is on my X account, and this person had posted that consumers expect stocks to fall the next 12 months. Retail traders have completely given up. This is a huge buy signal as well. It's just more confirming evidence that people are they're going to be positioned wildly wrong. And just to wrap this up, let's take a look at the smart money indicator. This looks at the commitment of traders and then does the opposite of what these people are doing. They're terrible. They're really terrible timers. So let's go and look and see what I'm looking at over here. Look at this. They've been selling hand over fist. These people have been right over here, which, boy, oh boy, they're going to be really, really wrong is what I'm looking at. And let's look at one more S&P 500 strategy and see how that's positioned right now. This one was doing so well. It got hit for one day. It bought a little bit early. It bought on that Friday before the Monday sell-off. But this one's doing very, very well. And right now, it is holding SSO. That's the leverage 2 times ETF for the S&P 500. And looking to sell into a rally. As I haven't looked at the market since I've been recording this video. It was up last time, so I wonder if we're going to get hit today. We'll cash out, and then we'll buy at a lower price. And we may go back into inverse funds, but my expectation is that the markets have bottomed, and then we're going to see, it could be a stair step. It's usually, we don't get a straight V bottom, but if you look closely at charts, like let's say at 2020, let's take a look at that right now. Let's take a look. And we can see how this was being traded back then. There we go. A little faster if I just drag this little doodad over here, isn't it? So there we go. There was that crazy plunge. And you see how it was just like a stair step on the way up. Buy, sell, buy, sell, buy, sell. I would love for something like this to happen, where you can just make so much money when it's very volatile. So I hope that helps. See ya.